let's invest right. Guys, if you haven't subscribed us yet, do subscribe below and press the bell icon. Before we start our video, I hope you have watched all our videos before. And today, the topic which we are going to discuss is a very important topic for us, for you to trade. Today we are here to discuss about 10 important mistakes which normally anyone can make while trading in stocks. Or this is one of the most important things to remember. So we are here to discuss those 10 important mistakes which we don't want you to make. So let's start.
So the first mistake that people make is about patience. Well, patience is the key if you're investing in the stock market. You have to wait. If you're in the right direction, you are making the right things, right moves, then patience. You have to be patient. Then only you'll be profitable. Well, patience will not cost you anything. But if you don't have patience, it could cost you much because your investment could go down. You could have negative returns. That's why one of the mistakes that people make is about patience. They don't have the patience and they don't wait. You have to wait. You have to wait because if the prices go down after you purchase, what will you do? You'll sell the shares. No, that's not the right way. You don't have to be go into a fear. Well, if the market is going down, don't be afraid. Be patient, and that will help you.
Another important mistake to understand is never trade against the trend. So it's like, when you were saying that some stocks are really falling and its prices are falling and you just wanted to buy them. Well, first of all, it's very important to understand why the price is actually falling. If you have seen that and you are thinking, let's buy on a dip, on every dip you are buying and you're increasing your position, it is just not a right decision to make, because there should be a reason, there should be a fundamental reason behind that stock which is falling right now. So, and secondly, if you are seeing there is a boom of something and the stock is really appreciating its value, but you are actually short selling it, so you are going against the trend, that would cost you a lot, especially in the short term. So always do your due diligence before making any decision. Follow the fundamentals. It's very important. Never trade against the trend.
The third one we have is not to fall in love with a company or a stock. Regardless of whatever return the company or the stock would have given you, don't fall in love. Don't keep on investing. Look at the fundamentals. Look theoretically. Well, I'll give an example. Imagine if a business owner loves his inventory, will he not sell it? Well, that's the bread and butter. He will sell his inventory to make profits. That's right. Don't fall in love. What people do is to keep on investing in one company. It's important to diversify. If you fall in one company, regardless of whatever the situation is, you'll not make returns. That's one of the mistakes that people make. If you make returns and you had an expected price of a particular product or a stock, you reach that, then you sell it off. You make the product and that's it. Don't go beyond it. Don't keep on waiting. If you think that's the peak price, sell it off and don't wait. Don't fall in love with the company. That's the mistake that people make, and I hope you'll not make this one.
The fourth mistake which we are here to discuss is trading without a plan. It is very important for all of us to understand. If you fail to plan, you plan to fail. It is still valid when you are trading in stocks. So you don't have a plan. You buy a position, you buy a stock, you don't know when to enter, you don't know when to exit. You're just following what everyone else is saying on different platforms. You don't know why you are buying, whether you know their business, whether you know their stock, whether you know their fundamentals. You don't have any study. And the most important thing, the stock prices are either going are either increasing or they're decreasing. You don't know when to enter, you don't know when to exit, you don't realize your profits, you don't have a target, you don't have objectives. So ultimately, for the time being, you might be able to see unrealized profits, but if you haven't converted those profit into your realized equity, it was just there on the app, and ultimately you will lose everything what you have. So whatever the targets are, you should stick to your target, you should stick to your plan, and ultimately you will definitely be successful with your trading.
The next mistake which we'll discuss is about diversification. It's important to diversify, but what some people do, they diversify too much. Well, that could ruin you as well, make your investment down as well. Because when you invest in a company, you have to do the analysis, you have to look at the company, look what it's doing, what it's planning, what its future is, how the financials are rolling up. You have to do all these analysis when you're investing. So if you invest, for example, if you have $10,000 and you invest $100 in each of these companies, in so many companies. You'll have so many companies to try. That will not be the right way. It's important to diversify, but it's not also important to not too much of diversification, because that will not help you. You'll not be able to be in the market. You'll not be able to know the news, what's happening, what the company is doing. So my suggestion would be to pick up the companies, pick up 20 to maximum 40 companies. Look at those. Diversify in terms of industry. Diversify in terms of companies, in terms of market cap. Bigger companies, smaller companies, growing companies, large companies, dividend growing companies. This will help you. This will help you in making your portfolio a good one, a diversified one. So I'll suggest diversify, but not too much of diversification.
The sixth mistake over here is trusting stock promoters. Guys, stop trusting people who are promoting any stocks, who are paid to promote. You know, ultimately what would happen, they are getting the payment of their announcements, of their promotions, but ultimately you are not following the fundamentals. It is very important to understand why you are investing. Again, we would say go and see the fundamentals of those stocks. Yes, it is good to know what are the trending stocks. It's good to know why people are promoting those, whether they are really financially that strong company, whether they are promising company or not. But just don't blindly follow the stock promoter.
The next mistake which we will discuss is about emotions. People let their emotions play their part in their investments, in their decisions. Well, emotions has an important role. If you're sad, if you're angry, don't make investment decisions. Don't buy stock like that, just like that. If you have it on your app, if you're trading online, it does not mean you'll just buy it with the emotions. Be thoughtful. Be analysis. Do the analysis. Do the fundamental analysis. Make rational decisions. Make decisions which will make you profitable. If you make decisions just like that, impulsive decisions will not give you. This is not a gambling. This is not a betting. Come on. If you want to try this, go to a casino, not to a stock market. That's not the place. That's why. Don't let your emotions come play in your part in your investments. Let your emotions be. Keep your emotions aside. Make rational decisions, and this will help you in making profitable decisions.
The next mistake which we are going to talk about of not understanding the importance of accepting the losses. Guys, everyone wants to earn. Everyone wants to be successful in their each and every trade. But is it really possible? Is it really possible that all of your trades, all of your decisions which you have taken are going to be profitable? It's not at all possible. So that means there could be some times when you have opened a position and that went the other way around. So what you need to do? It's very important to use the options like stop losses to understand. There is a possibility that you must be thinking that this stock would go up or this stock would go down for a short-term period or the medium or the long-term period. And if it is not following that pattern, then you should also cut your losses. You should understand the importance of accepting the losses, because it would ultimately limit your downside. If not, and you are adding more positions by taking the position on a larger side, that would affect your portfolio, that would affect a lot of decisions which you are going to make with your other stocks which are actually successful. So it is very important for all of us to understand not to make these mistakes while investing.
So the next mistake that we will discuss is about lack of preparation. Well, it can impact your decision, your investments, and you can have your profits turn into loss. Why? How? Well, let's know. Because if you don't analyze the company, don't know what the company is doing, don't know what the company wants to do, what are the products, what are the services, in which industry, how the industry is growing. If you don't know all this, if you don't do the analysis, if you don't know what the competitors are doing, what the competitors are coming up, what products or services they are coming up, what innovations the competitor is doing or the company is doing, will the innovations succeed or not? Is the company investing too much on A&M, R&D? Is the company having too much of cost versus others? Is the EPS right versus competitors? Is the PE ratio right? All these analysis you have to do. This will define your fundamentals. This will define you are doing the right thing. If you do these preparations, if you analyze the company versus others, you have to make alternatives, A, B, C. Which one to invest? How could you know? Only if you know these, if you do your preparations. If you are not prepared, if you have lack of preparation, you will not succeed, because you will be, again, going with your gut feeling. That is not the way. If everyone is investing, say, on A company, will you invest? No, that's not how it goes. Because others could have investments Other could have profits, but maybe you are entering late, or you are, whatever the reason is, you could not be profitable just like that. You have to do your due diligence. And that's why it's important for you and every one of us to not make this mistake and not just buy stocks or sell stocks just like that. Have the fundamentals, do the preparation, and this will help you in making profitable decisions.
The last mistake which we are here to discuss is trading too large positions. So guys, it's very important to understand that if you invest with a very high amount out of your portfolio's percentage, that would really affect you, because if the stock is going on the other side of your expectation, then that would not only give you a tough time to fight with that kind of a stock, and ultimately it can also result in for you to make some other decisions which again would go against your actual planning, which we have discussed in previous mistakes.
So these were the 10 mistakes that people make. We want you not to make these, because if you do this, you will not make your profitable decisions. You may make one, twice, thrice, not every time. You can be lucky few times, not every time, my dear. It's important for you and us and all of us to understand these things, to understand and not to make these mistakes. Only then you will be profitable. We hope you continue to invest right, and let's invest right. Hope you like the video, press the like button and subscribe to our channel. For any questions or queries, please do comment. We'll be answering your questions. Thank you.